Welcome back to AlgoBot, your friendly guide to the world of automated trading on MetaTrader 5. I'm the AlgoBot narrator, and today we're exploring an expert advisor called Contracting Body Reversal. This is a candlestick pattern strategy with a fresh twist on the classic reversal idea. Over the next few minutes, you'll learn how it reads two same-colored candles whose bodies are shrinking, how it waits for price to reclaim the whole pattern, and how it uses a trend filter together with volatility-based risk controls. Everything here is for education only. Let's take a closer look together. Let's start with the big picture. Contracting Body Reversal is an expert advisor built for MetaTrader 5 that studies the shape and size of individual candles. Most two-candle reversal patterns that traders know, like the harami or the engulfing pattern, rely on a second candle that is the opposite color of the first. This strategy takes the opposite view. It looks for two candles in a row that share the same color, yet whose real bodies are steadily getting smaller. In the world of candlestick analysis, this is sometimes called a homing pigeon when it appears at a low, or a descending hawk when it appears at a high. The idea is that when a market keeps pushing the same direction, but each push covers less ground, the crowd behind that move may be running out of conviction. The strategy reads that fading force as a sign that the short-term move could be ready to turn. It does not act on the pattern alone, though. It adds a trend filter using an exponential moving average, so that a potential bottom only counts when it forms on the value side below that average, and a potential top only counts when it forms above it. It also waits for confirmation, requiring price to reclaim or close back through the entire pattern before committing. The EA trades on a single primary time frame and keeps just one position open per magic number at a time. Risk is always defined in advance using the average true range, so both the stop and the target adapt to current volatility. This kind of approach may appeal to traders who enjoy price action and candlestick study, and who prefer defined, rules-based entries and exits. Remember, this is educational information only, not financial advice, and trading always carries the risk of loss. Now let's walk through exactly how the strategy makes a decision. The EA only acts once a bar has fully closed, so it works with settled candles rather than a flickering live price. It labels the three most recent closed candles. The oldest of the three is the outer candle, the first push. The middle one is the inner, contracting candle. The newest is the confirmation, or reclaim, bar. For a long setup, the strategy first checks that both the outer and inner candles are bearish, meaning each one closed below its open. Next, it measures the bodies. The outer candle's body must be meaningful in size, at least the MinBodyAtr setting, which defaults to 0.5, multiplied by the current average true range. This makes sure the first push was a real move and not just noise. Then the inner candle's body must be genuinely smaller, no larger than the contraction ratio, defaulting to 0.7 times the outer body, and it must sit entirely inside the outer body. That nesting and shrinking is the momentum quietly fading away. The strategy then confirms location. The low of the pattern must be the lowest low over the extreme loopback window, which defaults to 12 bars, so the setup sits at a fresh local bottom. And the inner candle must have closed below the trend exponential moving average, whose period defaults to 50, marking it as a genuine dip on the value side. Finally, the confirmation bar must close back above the highest point of the pattern. That reclaim is the sign that buyers have stepped in, and the EA signals a buy. The short setup is the exact mirror. Two bullish candles, the inner one smaller and nested inside the outer, a fresh local high over the look-back window, the inner candle closing above the moving average, and then a confirmation bar closing below the pattern low. Risk is bracketed the same way on both sides. When a buy is placed, the stop is set below entry by ATR multiple SL, defaulting to 1.5 times ATR, and the target above by ATR multiple TP, defaulting to 2.5 times ATR. A sell mirrors this. With these defaults, the target reaches for more distance than the stop, a reward to risk shape of 2.5 against 1.5. The EA holds only one position per magic number at a time. Let's look at the actual MetaTrader 5 code that runs this logic. At the top are the input parameters you can adjust in the EA's settings. TrendPeriod sets the length of the trend moving average. Extreme loopback controls how many bars define a fresh local high or low. Contraction ratio decides how much smaller the inner body must be, and MinBodyAtr sets how large the first push must be relative to volatility. ATR period, ATR multiple SL, and ATR multiple TP handle the volatility measurement and the stop and target distances, while lots sets the trade size. Below that is the long block. You can see 5 conditions combined with logical and both bear checks that both candles closed lower. Inner inside bearish checks the inner body sits inside the outer body. Fresh low checks the pattern owns the local bottom. Down value checks the inner candle closed below the moving average. And reclaim up checks the confirmation candle closed above the pattern high. When all 5 are true, the code reads the ask price, places the stop 1.5 ATR below and the target 2.5 ATR above, and calls trade.buy. The short block underneath is the mirror image. Both bull, inner inside bullish, fresh high, up value, and breakdown must all be true. Then the code reads the bid price, sets the stop above and the target below by the same ATR multiples, and calls trade.sell. Notice how both sides share the same structure, just flipped in direction. That symmetry keeps the strategy balanced between longs and shorts. Let's bring this to life on the chart. On screen, you can see a series of candles with the blue trend exponential moving average running through them. Watch how the strategy builds a long trade first, and then a short trade. At the far left, price is drifting sideways near the moving average. Then a strong bearish candle appears, a wide red body that pushes price firmly lower. This is the outer candle, the first push, and its body is comfortably larger than the minimum size the strategy requires relative to volatility. Notice that this candle also carves out a fresh local low, dropping below the blue trend line onto the value side. The very next candle is the key to the pattern. It is also red, the same color, but its body is much smaller, and it sits nestled entirely inside the previous candle's body. This is the contraction. Sellers are still in control, but they are covering far less ground than before. The strategy reads this shrinking body as momentum quietly fading. Because this inner candle closed below the moving average, and the pattern now holds the lowest low of the recent look-back window, the location filter is satisfied. Now comes confirmation. The third candle turns green and closes back above the high of the whole pattern. This is the reclaim, the moment buyers take back everything the 2 red candles gave up. All 5 long conditions are now met, and you can see the buy entry marker appear. The stop is placed below the fresh low, a distance of 1.5 ATR, and the take profit sits above at 2.5 ATR, giving that larger reward to risk shape. From there, follow the green candles as price climbs. Buyers stay in charge, each candle stepping higher, until price reaches the take profit target and the long trade closes in profit on this illustration. Now the market has rallied well above the moving average, and the mirror image begins to form at the top. A tall green candle prints first, the bullish outer push, setting a fresh local high above the trend line. Right after it, a small green candle appears, the same color but with a much smaller body tucked inside the first. Once again the bodies are contracting, this time buyers running low on force at a high. The inner candle has closed above the moving average, and the pattern owns the local high, so the short location filter is met. The next candle then turns red and closes below the low of the pattern. That break below is the confirmation, and the sell entry marker appears on the chart. This time the stop sits above the fresh high at 1.5 ATR, and the take profit sits below at 2.5 ATR. Follow the red candles down as price slides lower, step by step, until it reaches the take profit target and the short trade closes on this example. Notice how, in both cases, the strategy waited for the same 3-part story to complete. A meaningful push, a same-colored shrinking candle that hints the move is tiring, and finally a clean reclaim in the opposite direction before any position was opened. That patience, combined with a fixed, volatility-based stop and target, is the heart of how contracting body reversal approaches the market. And that brings us to the end of our look at the Contracting Body Reversal Expert Advisor. Today we covered the core idea of 2 same-colored, shrinking candles signaling fading momentum, the trend moving average filter that keeps setups on the value side, the reclaim confirmation that must close through the pattern, and the volatility-based stop and target that define the risk on every trade. Remember that everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. Every strategy will have winning and losing trades, and trading always carries the risk of loss. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to explore next, and subscribe so you don't miss future analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.